Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look in the gold market. So in the gold market we see much better performance in respect to response to CPI release. So on euro currency actually rally has been erased already by today's morning, but on the gold market you can see pretty nice performance here, short-term reaction. So for purposes of the daily pattern that we discussed previously, I mean this potential head and shoulders, I still wouldn't consider this point for entry. If you trade on a daily weekly chart, I prefer to get still more harmony. So maybe it's indeed upward direction could start right from here, but this chance is not worth it to take the more risk in trying to jump in right here without waiting the possible deeper retracement. So I think that if you try to take the position on the gold on the daily chart with this pattern, it makes sense to wait. If even we miss this trade later by some reason, but in the current circumstances, I think that, well, CPI is great, as we'll get less numbers, less value, but, well, it's not sufficient to say that indeed market stands in the reversal is forming great bullish reversal pattern, so it's a bit early. That's what about the daily chart. But for intraday purposes, for trading on intraday charts, this is, well, very good stuff. So we'll take a look at it. First of all, I also would like to show you the interest rates. So remember this flag pattern that we discussed on the 10-year yield in treasury bonds. You can see that indeed market, once it wasn't able to reach the opposite bottom, I said it looks bearish, and you can see now standing in a breakout of this. So for gold, it will be just nice if it will continue a bit lower and support the gold action. Also, I would like to remind you that despite we already have the CPI, we still will get a consumer confidence release and retail sales, which also will be important because retail sales, as you know, 70% of the gross domestic product. So it definitely makes impact on the gold market because it directly relates to the Fed policy. Currently, everything stands balanced around the Fed expectations with these weaker CPI numbers. Investors are come down a bit and still watching for November currently, probably, expecting nothing on the September meeting. Although our view that it's more probable even to hear something in December. We will see. Well, that's what about the daily chart. You can see here market has formed bullish reversal candle. It's forming new lows here and close above the top of the previous session, and actually it was close above the whole previous consolidation. That's definitely bullish in the short term because this jump sets the good short-term bullish momentum, which theoretically should get the continuation with the nearest few sessions. So as a conservative view, we suggest that market could show another leg up here in a range between 1810 and 1830. If we'll get lucky and indeed numbers will be weaker and will support the gold market, I'm not exclude the chance we're trying to challenge this area and trying to proceed higher, somewhere into the 1850 area. It's also possible, but that needs some external assistance from the data. Now, in the short term, on the 4-hour time frame chart, you could see a few bullish signs. First of all, which is great that market completed finally the target of the 3 drive. So it hits the lows between the second and third drive. Second, you can see here that clearly from Washington rings, this market grabs stops below this area and returns at the backup. And that is also kind of the fake breakout of the flag, kind of the bearish trap, which is also supportive to the gold and creates good short-term bullish context. As a result, also, this divergence right now had some special meaning in the light of these recent events that we have here. As you know, divergence suggests the taking out of this top and give the hint that maybe indeed data will be not as good as expected. But that is just only the suggestion. So finally, on the hourly chart, you could see market hits the 1810 resistance again. So this is previous consolidation, 618 level now shows the pullback. So if you're searching chance to trade gold on the long side, that's the stuff that you could consider. You could consider 1798, 1791 as levels for entry, because we suggest that it might be some kind of the ABCD pattern to the upside at least. Because here we have the bullish reversal candle on the daily chart, and as a rule, reversal candles has the continuation. So that's why in the shorter term, with a couple of sessions today, tomorrow, maybe to Friday, it might be kind of the ABCD stop to form here. Stops should be somewhere below this area, because it's based mostly on the reversal candle. And the validation point also will be somewhere in this low. So if market somehow still keep drawing and just drop below the lows, means that the short-term stop has failed. Well, that's the common thing that you probably know by yourself. So that's our view currently on the gold. Let's keep watching. We'll be with the short term, and it's really interesting what data we will get and how it impacts on the shape of the daily pattern that we have, whether it will be formed later or not, or market will start upward action immediately.